Welcome to Chapter 10, Sales and Cash Receipts Journals. Chapter 10, Essential Outcomes. You will be able to record transactions into the Sales and Cash Receipts Special Journals by identifying accounting concepts and practices related to sales and cash receipts for a merchandising business. B. Journalizing sales on account using a sales journal. C. Journalizing cash receipts and recording cash discounts using the cash receipts journal. D. Recording sales, returns, and allowances using a general journal. E. Connecting key terms in the chapter with application. (10-3) Accounting Terminology. Sales return. A sales return is a credit allowed for returned merchandise by a customer. A sales allowance is a credit allowed for merchandise that is not returned. Credit memo is the objective evidence for all sales returns or allowances. The sales returns and allowance account is used whenever merchandise is returned or an allowance is given to a customer for merchandise sold. It is a temporary account. It is a contra account to sales. It has a debit balance. A credit memorandum for sales returns and allowances. You will find the credit memorandum number. There will be a date. The credit memo will identify who the customer is. It will also show its account number and give you a description of what is returned or what the allowance is for. Since we also charge them sales tax, we also have to return the sales tax to them. So how do we journalize sales returns and allowances? On March 11th, we granted a credit to Village Crafts for merchandise returned, $58.50, plus we need to return their sales tax of $3.51 from the sales invoice 160, which totaled $62.01. We will record this entry in the general journal because it is a credit memo. We will debit sales returns and allowances for $58.50. We will also debit sales tax payable for $3.51 since we are returning back to the customer the sales tax that we charged. We will credit our accounts receivable / Village Crafts, put a slash in the post reference column, and we will add up the sales returns allowance and the sales tax payable, and that will be our total for accounts receivable, $62.01. So we write the date, we write sales returns and allowances, we write the credit memo, we write the amount of sales return, we record the sales tax payable, we write the sales tax amount, we write the account to be credited, and we draw a diagonal line in the post reference column, and finally we write the total accounts receivable amount. Let's do a comparison now between the sales and purchases account. Sales is merchandise sold to a customer on account, whereas purchases is merchandise purchased on account or for cash by a business. Sales is the controlling account, as well as purchase is a controlling account as well. Sales has a credit balance, whereas purchases has a debit balance. We record sales in the sales journal. We record merchandise purchased in the purchases journal. Both of these accounts are temporary accounts and will be closed out at the end of the fiscal period. Comparing returns and allowances. Sales returns and allowances is when a customer receives a credit on merchandise sold to them. Purchases returns and allowances is for a business who is receiving a credit from the vendor for the merchandise purchased. Sales returns and allowances is a contra account to sales. Purchases returns and allowances is a contra account to purchases. The normal balance for sales returns and allowance is a debit. The normal balance for purchases returns and allowances is a credit. The source document for sales returns and allowance is a credit memo. The source document for purchases returns and allowances is a debit memo. Sales returns and allowances, as well as purchases returns and allowances, are both recorded in the general journal. Both of these accounts are temporary accounts and will be closed out at the end of the fiscal period. Comparing the discount, per sales discount and purchases discount. Sales discount is given when a customer pays early within the credit terms. A purchase discount is when a business pays a vendor early within the credit terms. The controlling account for sales discount is sales. The controlling account for purchases discount is purchases. The normal balance for sales discount is a debit. The normal balance for purchases discount is a credit. We record sales discount in the cash receipts journal. We record purchases discount in the cash payments journal. Both of these accounts are temporary accounts and are closed out at the end of the fiscal period. Chapter 9 and 10, Summary. Please put this to memory. You need to know the special journals, the objective evidence, and the transactions that involve each of these journals. (10-3) Work together. Please open your accounting book to page 287. You will need Work Together page 229. If you need assistance, please let me know. That's all, folks. Now it's on to your application problems. Whenever you feel you need help or need an explanation, please let me know.